Welcome back, everybody. Sive is here with the Forex Peace Army. Let's update our view on the cryptocurrencies. So in general, it was really active performance in recent few sessions. Market kept going lower and even tested kind of the 60 even, just barely hasn't reached the 57.75 area, which is a major 618 support on the monthly chart. And as I explained last time, actually an area around 60 is a last outpost for the bulls. So market with all efforts trying to hook up for this area and stay above it. It's just by the technical indicators. If you take a look, we have the 618 support, which is actually last support here. Of course, we could build another one from the absolute lows, which will be somewhere around 50, probably slightly lower maybe. But from the most active stage of the performance of the Bitcoin, this area seems is a major one. And also, it accompanied with the monthly deep oversold combination. So this is really strong background for the bulls right now, some real support. And also markets testing the yearly pivot support one. So also talked about this, that actually a yearly pivot support one could determine the breaking of the direction. So for instance, if market this year will drop below 66 and close below it, it means that this trend is over. So market stands in a longer term bearish trend. That's the reason why the markets consider testing it and returning it back up, so feeling some support here. So that is what we have on a long-term chart. Currently, it depends on what will happen here, so where market will stay or not. If it will stay here, we could get chances on upward rebound and upward continuation this year. I'm not sure this will be absolutely new top, but at least market will remain in an area between the 60 and the top. So it's keep chances for further upward action. It means that current trend will remain in this situation if this area will be broken, and we should be prepared for deeper action, and then it might be some sideways wobbling action for years on the Bitcoin. So that's how this area is really important. On the lower time frame, if you take a look at the weekly, I do not consider it anymore the hand shoulder shape, because if we keep it, the slope of the neckline will be too strong. It will be some really big skew here, which is not typical. And currently we just consider this performance separately. You can see that probably the only reason why market was able to stay here and stop beyond the fib levels, it was the weekly oversold. So you can see it's if we wouldn't have the weekly oversold, I'm not actually too much surprised if market will just keep going lower below the 60. And you can see previously it already has happened. So every time weekly oversold support market and triggers at least sideways action. So just market taking pause and then hits it. So on a weekly picture, we definitely have bearish background. Market has formed bearish reversal swing. So you can see this swing down is greater than this swing up. This let's say increased chances on a second attempt to move lower. So usually when reversal swings happens, a market as a rule is forming some second leg to the downside. Not necessarily that lows will be broken, it could be retested, but chances on another attempt to move lower currently are relatively high. This is first moment. Second moment, when the market forms bearish reversal swing, as a rule, once the swing is over, market forms deep retracement before continuation. I plan here two levels, 50% and 618, 93 and 101. So one of these levels might be reached with the pullback. It's a kind of the hand and shoulder shape, but not quite perfect. So idea is the same. So pullback after, because actually the momentum that we have here on the monthly chart is still present on the market. It exists. So markets have impulse and momentum, so that they need to be fade before any other action will happen. That's why, as a rule, impact of this momentum leads to the deep retracements. That's what we have currently on the long-term chart. On the daily chart, you could see that we've got precisely the target that we have specified, 69, and even here was some slippage to the downside. Also market dropped to the daily oversold and now shows some rebound. What particularly we could consider here? First of all, before we start thinking about big weekly trades, where we're going, maybe taking the short position or something, let's stay focused on this most recent thrusting action. You could see that market is actually closed and locked between the oversold and overbought area. So potential for upside action is limited, and we could consider an area around 75, maybe slightly higher, 76, as a potential point of the pullback, on the first pullback. This could create opportunity for bearish bread and butter trade, because here we also have bearish momentum. That will be first retracement after collapse, and an area somewhere around 75, 76 might be interesting to keep an eye on possible bearish reversal patterns on lower time frames, on intraday charts. The minimum target of this pattern will be 618 support of the whole upward action. So approximately, if it starts from the 76, target will be around 66, 65 maybe. So that's the first trade that we need to keep an eye on. But here we also have some options that might be. This trade is possible if market will keep going higher directly to one of the resistance. So if you take a look at the 4th time frame chart, we have here resistance 74.50, and if market will keep going higher right to this level, yes, we could get this momentum trade. But instead of that, if we will see that market is showing deeper retracement right back down, it might be, well, those who are dealing with the Dinopoly method of trading knows that it's called the double ripple buy. So we have good thrust. Here might be close above the 3x3 moving average. If we still will get not the upward action but drop down, it might be close below, and then if market will rebound. So on a classical shape, it could remind kind of the double bottom performance, but it's a bit specific double bottom with the Dinopoly framework. And in this case, the pullback here might be even stronger. If double ripple will be formed, it might reach somewhere in area around 80. Because in this case, market will take more time to form the bottom, and overbought area might move slightly higher. So in this case, market just could show a bit deeper retracement. So that's two patterns that we need to keep an eye on. Currently, based on the hourly chart, it seems that the second chance of the deeper action here seems more probable, because, well, have a look. Let's suppose we have the ABCD. Here is the nearest target, 75.50. which agrees with the idea of the bread and butter, 75.50, 75, somewhere in this area. But take a look how market performs. Very slow CD leg, almost flat. Deeper divergence between these two tops. This market can't even keep going to this target. And that makes me think that a situation with a possible downside, some kind of the ABCD or deep retracement first, seems more probable. So that's all options that we have currently on the Bitcoin market. Speaking shortly, on the big charts, we are waiting for retracement here. Whether it will become reversal or not, it's difficult to say currently, but the pullback might start. But this is weekly chart. It could take a few weeks before it starts. Meantime, while we're waiting for that, we need to understand how market intends to show this pullback. Obviously, we will get here a kind of the V-shaped reversal, hardly W-shaped reversal, of course. And that might happen in a few different patterns. So first pattern that might be formed with the first pullback somewhere to the 75, it might be downside pullback first, then market could start upward pullback. In the case of the double repo, we could get a bit deeper pullback initially. That is what we are watching for. But all of these trades currently are mostly stand on intraday charts. This is very short term. To start speaking about the daily patterns and the weekly patterns, we need to wait when these trades will be over. The market will trade them, and then I could start forming some bigger pattern that will tell us what actually could happen next. If it will be tight triangle here, obviously it will be a suggestion that we will go to the OP target around 52. So we will discuss this later once we will get the more information.